Imagine waking up on Friday morning, you open your brokerage account, SpaceX, the biggest IPO in history. The stock opens at $150. Within hours, it surges. The company is suddenly worth more than $2 trillion. Over 500 million shares trade hands. Social media explodes. Financial news can't stop talking about it. Your coworkers are buying it. Your friends are buying it. YouTube gurus are calling it the opportunity of a lifetime. And at that moment, most people ask the wrong question. They ask, should I buy SpaceX? But if I were starting from scratch in 2026, I would ask a completely different question. How should I build wealth over the next 20 years? Today, I'm going to show you exactly how I would do it. Not the exciting version, the version I'd actually trust with my own money. The IPO raised $75 billion. The stock jumped 19% on its first day. The company closed around $161 per share. At one point, it traded above $176. Its valuation crossed $2.1 trillion. Then after the market closed, it kept climbing. Within hours, another $80 to $100 billion was added. That's more than the entire value of many Fortune 500 companies. And honestly, I understand the excitement. SpaceX has reusable rockets, Starlink, artificial intelligence ambitions, plans for more than 100,000 satellites, data centers in space, and Elon Musk, the most famous entrepreneur on the planet. It sounds like the future. But here's what I've learned after investing for years and teaching finance to college students. The future can be an amazing company and still be a terrible investment if you overpay for it. Those are two completely different things. Most beginners think investing is about finding the next winner, the next Apple, the next Nvidia, the next Tesla, now the next SpaceX, but that's not how wealth is usually built. Imagine two investors. Investor A spends years chasing the hottest stock. Investor B spends years buying productive assets consistently. Guess who usually wins? Investor B. Because wealth creation isn't primarily about prediction, it's about ownership. The stock market rewards people who own great businesses for long periods of time, not necessarily those who constantly jump from one trend to another. And that's why my first investment rule for 2026 is simple. Don't build your future around a single stock, not even SpaceX. Before investing a single dollar, I would build a financial foundation. That means an emergency fund, 3 to 6 months of expenses. I know, that's not exciting. Nobody brags about emergency funds, but emergencies don't care. If your car breaks down, or you lose your job, or a major bill arrives, you don't want to be forced to sell investments at exactly the wrong time. That's how good investments become bad outcomes. An emergency fund protects your investments. It's the foundation. Now we can start investing. If I were starting in 2026, most of my money would go into low-cost index funds. Why? Because nobody knows the future. Not me, not Wall Street, not financial influencers. 20 years ago, people thought Yahoo would dominate forever. They were wrong. The future always surprises us. Index funds solve this problem. Instead of owning one company, you own hundreds, sometimes thousands. If a future winner appears, you automatically own part of it. You don't need to predict the winner. Now comes the magic. Not stock picking, compounding. Imagine investing $500 every month, month after month, year after year. Nothing dramatic happens at first, then something changes. Your money starts earning money, and that money starts earning more money. That's compounding. This is how wealth is built. Slowly, then suddenly. Now let's return to SpaceX. Would I buy SpaceX? Possibly. but not as my main strategy. If I truly believed in the company, I might allocate 5% of my portfolio, maybe 10%, not 50%, definitely not 100%. Because investing and gambling are not the same thing, nobody knows the future. That's why diversification exists. Not because we're pessimists, because we're realistic. Protect the downside first, then pursue opportunity. Every year brings new headlines: inflation, recessions, artificial intelligence, interest rates, political uncertainty, market crashes. There's always a reason to panic, always. But businesses keep growing, innovation continues, and patient investors are rewarded. The difference isn't intelligence, it's discipline. So if I were starting from scratch in 2026, here's exactly what I would do. First, build an emergency fund. Second, invest the majority of my money into diversified index funds. Third, invest automatically every month. Fourth, keep speculative investments like SpaceX small. And fifth, ignore short-term noise and focus on long-term ownership. That's it. No secret formula, no magic stock, no billionaire shortcut. Because the biggest investing lesson from the SpaceX IPO isn't that you should buy SpaceX, it's that everyone is looking for the next rocket ship. While the smartest investors are quietly building wealth one contribution at a time. And over the next 20 years, that boring strategy may turn out to be the most exciting result of all. Start with your first investment, then make another one next month, and another one after that. Stay consistent, stay patient, let time do the heavy lifting. Your future self will thank you. If you found this helpful, subscribe for more practical guides on investing in personal finance, and I'll see you in the next video.